Yes, guys, what is going on? Welcome back to Young Money Investing and welcome back to my weekly technical analysis. Really quick, if you're not subscribed, make sure go down, click that subscribe button so you never miss a technical analysis and you're always prepared for whatever direction the markets happen to be moving in. Now, let's go ahead and jump into the charts. We are going to start out, we're taking a look at Meta Platforms, better known as Facebook. This stock was featured on my channel about 2 weeks ago as the trade of the week. I identified this ascending triangle, saw the breakout happening, and had my take profit set as this pink line, which is the 200-day moving average. As you can see, I'll zoom in a little bit. We came right up, wicked it, came back off just a little bit, currently sitting at about $152. I do believe my take profit was about 155 on that video, which was this resistance line right back here. You can see along my cursor. I think this was a really solid trade, and it just happened to work out exactly as I anticipate. Let's jump into the markets. We are starting off on a daily time frame, looking at the Russell 2000. You can see we came up to our long-term resistance here at about 1923. We wicked it back here on Wednesday, came back off, moved back up. We're sitting right below it. We did kind of wick it on Friday, did not get the close above, but we are very close. So taking a look at our moving averages, you can see that our 20 moving average has gone through our 50 and our 50 has gone through our 200. So we are looking quite bullish on the Russell 2000. I would watch the open to this week pretty closely to see if we continue to move up. If we get a strong close on Monday or Tuesday above this 1923 level, I would think that we definitely have some more upside potential coming our way. However, if we do see that rejection back off, I would look for some type of retest around this 1830, 1840 level. And if that fails, I would expect us to come back down to about 1734. So that's what's happening on the Russell. Let's go ahead and jump into the NASDAQ. As you can see, we are sitting in this long-term descending triangle. Moving back into the daily time frame, we did get a close above on Monday, which was very nice. And then you can see we had 2 consecutive red candles, but did not get the close below. Specifically on Wednesday the 25th, you can see we came way down here, almost all the way down to our 50 moving average, but still closed above our trend line. Got the green close above our 200, and then as you can see here, we were able to hold it on Friday going into the weekly close. This is extremely bullish to me. I think the NASDAQ is about to absolutely pop off. I would expect maybe some resistance to come in about 12,890. That's about 650 points away. That's a very significant move. And there's really nothing in between. There's really no levels in between where we currently are and that 12,890 level that I just spoke about. So I think we are definitely going to see a very strong move up in the NASDAQ over the coming days and weeks. Let's jump into the Dow Jones. The Dow Jones is still kind of acting, still kind of moving a little bit sideways. Came out of our supply zone. You can see that our 20-day moving average is about to cross through our 50-day moving average. So that to me, quite bullish. I would like to see it break through our 50 moving average. I'd like to see price action move up to this resistance at 34, 345, come back down, catch a lift in that 20 moving average, and then break on through. That would kind of be ideal for me as a trader. Of course, we might just push straight through it. We might reject straight off. I don't really see a large downside move across any of our, indexes, barring some unforeseen catastrophic Fed announcement. But, given the bullish sentiment kind of regarding US stocks in general and the continued weakness of the dollar, I would expect this to keep moving up. I'd like to see, if we don't get a bounce off of this and then catch a lift off the 20, I'd like to see a break and a retest before I was really willing to long the Dow Jones. But obviously have to get through this 34,345 level first. So that's what's happening on the markets. Like I just mentioned, the continued weakness on the dollar. This is the DXY, the US dollar index. You can see we peaked back here in September of 2022, and it's pretty much been all downhill since. We are kind of sliding a little bit sideways along our trend line right here, and I'm actually going to zoom this in just a little bit. The thing to note though is we have this trend line coming like this, and you can see that we're making lower highs, lower highs, lower highs, lower highs, but we are holding this level. I do think we're going to see a break. I think we're going to see a break and a move back down to this 99.19 level, and that is going to send stocks straight up. Now that we kind of have a big picture idea of what the markets are going to do, what the dollar is going to do, let's take a look at my trade of the week. We are looking at Stitch Fix this week. The ticker symbol is SFIX. I have some lines drawn out here, and I'll show you what it is I'm thinking. So we have these two lines here, one at $4.08, one at $4.69. These are just two levels. You can see we were holding this $4 line really, really well. Kind of a false breakout here up to this 470 level, and then back down, holding it. Big drop off, and then a nice curve bottom here. I'll jot it here. Nice curve bottom. Love to see that from a technical perspective. And we moved right back up into our resistance at 470, rejected off, found support on our previous resistance line, got the close, and this is important, we got the close above our resistance level, one more time, rejected off, came back down, retested our previous resistance, which is now support at $4.08. We also have our 20 moving average coming up supporting price, and on Friday got a big green candle, plus almost 12% on the day. Strong close, not just above our resistance level, above our previous high on the close back on Monday. That to me says Stitch Fix is about to blast off. A lot of sideways movement. Zooming out to the weekly time frame, huge monster sell-off you can see here. I think that we are going to see some type of recovery here. So the only thing above us to be concerned about is this 200-day moving average. I don't think that's going to present much of an issue in all consideration. I think that after the type of sell-off that you saw, combined with this sideways consolidation, breakout, liquidity grab, move back up, I think that we're going to blow straight through this. The profit target for me is going to be this fair value gap right here. Between about $7.40 and about $8, I think is a fantastic take profit area. You can see that we do have this just a fair value gap, actual gap here from August of 2022. I think we're going to close the gap. I think we're going to close the fair value gap, and I think that we're going to see a move up to about $7.50 to $8. As far as stop losses go, I would set it at about what is our 20-day moving at? It's at 404. This is at 408. I would set it at about $4. So about $1 risk. That's it for me. That's everything I got. I hope you guys have a fantastic week. You are all the best. I appreciate every single one of you guys. Mad love, mad appreciation. Peace out, homies.